Welcome everyone. How's it going? I know, by the way, I saw your comments coming in on the chat here, and if you're watching in watching afterwards, let me know in the chat by putting in hashtag replay. But I got Matt Smith here from Good Soil Investment. I'm really been looking forward to this interview for a multitude of reasons. But number one being because we never really talked about the energy side of the business on the channel. So I have who I deem as an expert on this field on. And then number two, I was looking forward to this in the last 5 minutes because it looks like Tesla is rallying hard again. I have the stock ticker underneath us. I promised Matt we wouldn't waste too much of his precious time just talking about short-term price movements, but I think it is, it is kind of cool for us to celebrate as we kind of make history here. So, by the way, welcome, Matt. Thanks for coming on.
Yeah, thanks, no problem. And no need to apologize for watching the stock price. I mean, I get just as excited as anyone else seeing these, kind of crazy new highs that we're at. So, yeah, happy to talk about energy and happy to also just get excited about the stock and talk about short-term movements as well. So,
Love it.
yeah,
Awesome.
thanks for having me.
Cheers. Thank you. And Matt, what for those people that may not be familiar with you, and by the way, go follow Matt on Twitter. He's an awesome follow as well. I'll throw the link in the description. If for those that might not be familiar with kind of your work, if you want to highlight that a little bit, and perhaps people recognize you from Good Soil, but a little bit of background about yourself would be awesome. And then kind of your expertise in the finance world.
Sure. So I kind of started my career in financial valuation. So kind of got like a crash course in valuing options and valuing really anything, just because that was kind of the work that I was doing. From there, did a stint in investment banking, and that was I learned a ton of just very practical kind of financial skill sets, and really just got really good at I think being able to financially model any sort of company. I was a bit of a generalist when I was doing investment banking, learned a lot and quickly got disillusioned with that side of the space. So I moved into the corporate world after that, got a job in energy, which I think will lead into what we're going to talk about here today. But was managing a fleet of wind farms, actually. So I was kind of like my title was an asset manager. So I was responsible for kind of the commercial performance of this fleet of wind power plants for an independent power producer. So, have a very, I would say, unique perspective for Tesla investors of someone who actually has kind of experience in the generation market, but also, is doing a lot of stuff in the wholesale markets and kind of understand the regulatory hurdles and, different things that are kind of unique to that. It's a very weird industry. I mean, I invested in and I was working in a lot of different industries. I went into energy and I was like, this space is like so archaic and so highly regulated. It really is kind of ripe for disruption, but I think it's going to be a slow burn, as we'll talk about in a little bit. Anyway, I was doing that for a number of years. Did well enough to leave that job earlier this year, and just kind of by chance had a conversation with Emmett just to talk about some personal stuff, and got invited in to do some work with him at Good Soil, and kind of joined formally a couple of months later. So
Yeah.
been doing that for the last, I don't know what it is, 6-7 months or so now. And it's just a really fun time to be doing what we're doing.
It's super cool seeing you guys team up together because I respected both of you guys' work independently, and then seeing you guys kind of team up was kind of like watching like a superheroes movie. You guys coming together. By the way, we just broke $1,200. I'm not sure if you saw that in the corner there, but any thoughts
Jeez.
with your finance background? I know we were talking about this before we went live, and by the way, guys, timing. I have no idea why. For some reason, whenever we whenever we live stream, this happens. Knock on wood, touch black. But Matt, any insight as to like what we're seeing happen? It's unprecedented. I mean, we thought 2020 was unprecedented, but it's kind of shaping up to be much like it, if not bigger.
Yeah, I mean, so just full disclosure, my kind of professional background in finance is not like Gary Black's was, for example, where he was kind of heavy into the institutional space. I was doing mostly like sell side placements for private companies.
Mm.
So I had kind of a lot more, I would say, fundamental kind of valuation and investment banking experience prior to joining Good Soil, aside from just kind of personal investing success.
Mhm.
So that said, my sense from the last couple of days, and there's been a lot of talk of kind of gamma squeeze from the huge volume of kind of call options, short dated call options that we've seen lately. But I think that there were quite a few institutional investors that were probably either underweight Tesla or just didn't hold it in their portfolio. So as Tesla started to really rally and this kind of gamma squeeze started to intensify, I would imagine a lot of those, kind of fund managers, portfolio managers, were kind of looking at their performance, saying, "Hey, I'm underperforming my benchmark index.
Mhm.
I'm essentially losing alpha on a stock that I'm not convicted on. I may not think I may think Tesla's overvalued and that it's going to crash back down, but I just don't want to take the risk as a portfolio manager to say I'm going to be underweight Tesla when I don't understand what's happening, and it's a big source of kind of my variance from my benchmark index. So I don't know this for sure, but it seems to me that there would be a decent amount of portfolio managers who are kind of adding to Tesla just to kind of get that alpha risk off of their own portfolio.
Mm. And that would and totally agree with you there, and I think that's great insight by Gary and yourself. And but the question is volume, and today might not be the best example of this. Volume sitting at 25.6 million shares traded today, but last Monday and Tuesday we had 62 million shares, respectively, on each day traded. Does that kind of form in line of what you would expect if that were to happen, or do you think there might be a third party kind of player whales coming in?
Yeah, I mean, there could be a third party whale. I would kind of I'm not sure who it would be, honestly. I mean, I've heard quite a few folks on Twitter and elsewhere say, they're, you basically hodling, and they may have some call options which flip to in the money, and so then you've got some kind of delta hedging requirements just from the market makers.
Mhm.
So I think that could be at play, which would could explain some of the volume as well.
Right.
But I don't know. My own sense, I think there may not be a whale, but there may be, like Leo Kogwan, for example,
Right.
who was talking about how he's been adding even in the last couple of weeks. I think he said that he was adding. So
Right.
he's clearly a large shareholder, but not on the scale of, say, like an institutional buyer. And at the same time, we've seen ARK Invest continue to kind of shed shares just to maintain at that kind of 10% level.
Mhm.
So I don't know. I mean, I think nobody really knows, right?
Yeah.
But my sense is probably the fund managers and kind of delta hedging and the gamma squeeze going on here is probably a bigger driver of this
Gotcha.
share price movement. But I really don't know definitively.
Yeah. For sure. Fair enough. And although that might be true with the gamma squeeze, I think we both would agree that Tesla is worth what it is trading for, if not more, at the current moment. And we talk about the auto business, and we talk about what's the gross margin like, how are they operating with the 4680s, all that sort of stuff is going. How much do you think Tesla Energy is valued into this, if at all? And what is your kind of thesis with Tesla Energy moving, I guess, 5 or 10 years out, because it's a little bit harder in the short term to project.
Yeah, I mean it's kind of a loaded question, because I mean I could really kind of dive into this for hours. So
Mhm.
interrupt me if I drone on, or you want to go on a particular area. But I'm kind of two minds about it personally, because in the short term, I mean the margins on it are like in the tens of billions of dollars. They're frankly rounding error in the scale of the kind of the core auto business. Um, but like I was saying, I think the energy industry is kind of ripe for disruption, and I think Tesla's approach, I mean, is going to prove out to be kind of the lowest cost option. Maybe just to kind of give a scale of kind of what I'm seeing, from my kind of energy background, and where I think this opportunity can be so big.
Mhm.
Um, just if you think of like your energy bill as a residential customer,
Mhm.
it varies place to place, but generally speaking, the all-in cost for a consumer is like roughly 12 and a half cents per kilowatt hour. Um, and the majority of that, which I think most people don't really realize, is kind of grid cost. So it's like the transmission and distribution. So to get the power from the centralized power plant to your, the place where you're using it. Um, so, solar has, depending on the geography and the cost of the individual panels you're looking at, or if it's a solar roof, it can vary a little bit. But let's just say conservatively, it's the cost for solar, residential solar, maybe like 3 cents per kilowatt hour. So, as a customer, you're comparing 3 cents
Mhm.
to 12 and a half cents.
Mhm.
Um, so it's just like there's so much value on the table there. One, because solar is cheaper than coal or natural gas generation, but also because you're avoiding the entire kind of grid transportation equation. So that's where I think you see it just kind of being better from not only cost perspective, but just like it's a more efficient way to do things to
Mhm.
avoid unnecessary transportation, right? Um, So, I think that there's going to be a long way to go before customers, really kind of see that value equation. And there's a lot of kind of tricks utilities can pull to, if you want to stop paying those charges, well, you need to kind of have sufficient backup, or you need to pay some sort of fixed charge for continued access to the grid if you don't have enough battery support to pay for your own. So, I think it's going to take a decade plus for this disruption to really play out. But I think at the end of the day, the utilities are going to have a hard time kind of competing on, with distributed solar as opposed to paying for centralized generation plus transportation costs.
Mhm. You, that,
Um,
that gets me really giddy to think about, only because I don't understand half of the equation, right? Like, I'm just so ignorant, and self-admittedly, I'm so ignorant on that side of the business where, I definitely get the grand scheme of things. I just don't get the mechanics of how it's going to happen. Um,
yeah.
and so moving into, obviously, it's a cheaper solution. It is the better solution overall. Um, how do you think Tesla's scaling strategy into this works? And I know it's very early stage. Like you said, it's more of a rounding error at this point in terms of revenue. How do they deploy, in your opinion, or what's the best way, in your opinion, that they can go about scaling this into more of a meaningful side of their business?
Yeah. So I think they've been really quiet about the details of this. So, a lot of this is going to be a bit speculative, but I'm kind of taking from cues that they've disclosed publicly.
Perfect.
The first big one was back at Battery Day when they were talking about having 3 terawatt hours of storage. But if you do the math on how many terawatt hours are needed for their stated goal of 20 million cars, that leaves an extra 1.5 terawatt hours of storage, which they didn't really clearly define where that was going to.
Mm,
So the most likely answer to me is that 1.5 terawatt hours of stationary storage capacity annually would be for like stationary storage applications. So Powerwall, Megapack, PowerPack, all those stationary storage applications. So then if you do some kind of rough math on that, you look at the current pricing, which I think for Megapack is around $300 per kilowatt hour. So if you assume they'll have some sort of cost declines going forward, um, I think I had assumed when I was doing my modeling that they'd be able to sell those in the future at $240 per kilowatt hour.
mm,
Well, if you run that math, that equates to $360 billion per year in revenue potential,
mm-hmm,
which is just like a staggering scale.
mm-hmm,
Um, but that's just like the hardware component of it. So the thing that kind of gets me really excited is thinking about maybe an analogy is the way that Tesla sells hardware via their cars, right? Which
mm-hmm,
they get a nice gross margin on the cars that they produce, but then they have this $10,000 kind of software option on top of that, which is the full self-driving package. And maybe in the future there'll be kind of robo taxis and that network fee that they could generate. Um, well, with storage and energy assets in general, the thing that I think is really attractive is that these are between 20 and 30-year assets.
mm,
So, they may be in 2030, say, deploying 1.5 terawatt hours of storage, but in aggregate, maybe they have 10 terawatt hours of storage deployed. And what I think is the pretty exciting opportunity is they can kind of aggregate those resources and
mm-hmm,
offer the services that they can provide into wholesale markets and kind of generate some software like margins by selling those services. And so it's kind of a exponential on an exponential, because you've got annual deployments growing at an exponential rate, but then your cumulative deployed base, which is
mm,
what they can generate these margins off of, is growing at an even faster rate.
mm,
So I was doing another just bit of kind of ballpark math on what I thought the opportunity on that side of the business was, and just on the residential side, so kind of ignoring mega packs and a lot of the commercial and industrial side. I thought just the what you would call like the software or energy as a service margin potential on that side of the business around $8.5 billion per year. Um, so it's one of those things where I think by 2030 that will seem relatively small compared to the auto business, and even like the $360 billion on the hardware sales. That's a lot today, but I think it will still be less than half the business, by 2030. If they're selling 20 million cars at a reasonable ASP, that's auto is still going to be bigger than energy at that point. But it's just going to be hard to, or I think energy has that cumulative effect, like I was saying, that I think it will kind of outpace the growth rate of automotive in the
Mm.
long run, and probably especially 2030 and beyond.
Right. And 2030 seems so far away, but it's really not. I mean, at the end of the day, like that's only 8 or 9 years away from right now. So now at more of a, I guess, local level. So, speaking, I know Emmett, by the way, obviously you can speak maybe to his experience more than I can. He has a Tesla solar. He uses it for the majority of his energy, is it? Or do you know how that works?
I think so. I'm not sure his exact, usage, but by my understanding, based on the size, I think he had something like 4 Powerwalls or 5 Powerwalls or something like that. And
Hmm.
I'm not sure the capacity of the solar roof that he got, but I would imagine at that sort of scale, it would be all or almost all of his, home
Hmm.
generation needs.
Now and obviously, he lives in California. If I'm talking selfishly, maybe a little bit, but as someone that lives in Canada, what happens to people like us that, there is not a lot of there isn't a lot of sun up here, and the majority of the year it
Mhm.
is kind of cloudy. Let's say 49 latitude and kind of up. What happens to people in those remote areas? Can they get solar? Is it worth getting solar? Will it never be worth getting solar? I'm guessing it's probably the latter, but like to know.
Yeah, so the way folks in the energy industry kind of think about this issue is it's a term called capacity factor. So you've got a standard, let's just say you've got a Tesla solar roof tile that can generate, a certain amount of generation. Let's make maybe some easy math. Um, let's just say you've got a 10 kilowatt solar roof, so that's kind of the installed capacity.
Okay.
Where Emmett is in Southern California, you'll never the vast majority of the time you'll never be at that 10 kilowatt stated capacity. Obviously overnight it's going to be zero. Maybe close to noon it'll be uh, the full 10 kilowatts, but for the majority of the time you'll be some amount less than that. So capacity factor is kind of the measure of what percent of the stated capacity is the panel or is the solar project producing. And it's been a while since I've looked at these numbers, so I may be off a few percentage one way or another. But a place like California may have capacity factor of say I don't know the exact number, but maybe 20-25% somewhere in that range.
Mhm.
So the math on that would be 10 kilowatts times 25% times there's 8,760 hours in a year.
Mhm.
That would give you an estimate of your annual energy production, and so then you kind of compare that to your
Gotcha.
needs and just size a project that way.
Mm.
Or me being in Michigan, you in Canada,
Yeah.
the numbers are not going to be so good. So it may be 15%. Yeah, I think it might be closer to like 16% where I am.
Mhm.
Maybe it's 12% where you are, something like that.
Mm.
So roughly speaking, your economics may be half as good as Emmett's would be.
Mm.
So if you're getting for the same, let's say the same capital cost to put that panel in, you'll be getting half the energy output out of it. Um,
Mm.
Now that sounds bad, and you folks maybe right now that math doesn't really pencil, but to me the thing to keep in mind, and there's a whole I'd love to go on like a whole other side tangent on that, but maybe we can save it for another day. But your so Emmett's solar maybe let's say 2.5 cents per kilowatt hour, like we were saying before. Maybe yours is 5 cents per kilowatt hour on
Mm.
average, but you're comparing that to the utility rate, which is still 12.5 cents. So you're still avoiding all of the transmission and distribution costs. And so I think in the long term, higher latitude places with less solar resource will still be competitive with utility rates in the long term, because those costs are going to continue to fall for solar and for storage.
Mm.
And utility rates, this is the part I'd love to go into in a whole lot more detail, but utility rates are going to continue to go up because they've got essentially a
Yeah.
cost plus structure
Yeah.
that really incentivizes them to deploy capital.
Yeah, I just pulled up, I just Googled quickly, BC Hydro utility rate. It's about 9.4 cents per kilowatt hour is where I am.
Okay,
It's
that's better than most places, I'd say.
Yeah. And then so solar is awesome. Now, obviously, one negative factor that we've been hearing in kind of the headlines and just customer reviews has been the setup of solar from Tesla's end. And I think maybe that portion has to do with kind of who their independent contracts or contractors are in what areas. recently Tesla kind of made a shift into how they were going to deploy into people. Do you think they should take that in house of kind of fully controlling the setup, or outsource that the kind of aspect to homeowners, or what's kind of the best strategy there?
You know, they are targeting such an absurd scale here. As
Hmm.
much as I kind of love their vertical integration, just as a reminder for folks who may have kind of forgot one of these tidbits that Elon said. He said that their long term goal is to do 10,000. Well, their medium term goal, I would say, is to do 10,000 solar roofs per week. And then he wants to ramp that up to 20,000 solar roofs per week eventually.
Right. That's a
Which,
lot.
like, that's just a huge, like, it kind of boggles the mind. So
Right.
um, in my mind, I'm a little bit agnostic about what they do right now, to be honest with you, because like as we were saying earlier, the margins are so small, it's rounding error right now. So what I really want them to be doing is to kind of be piloting different things. Try partnering with a contractor, see if they're good, see if they can come up with a way to do it. Try
Hmm.
doing some stuff in house with the team and see what the economics look like for that.
Hmm.
But my sense is to get to 20,000 solar roofs a week, you're going to need a lot of help. And I think it may be reasonable to assume that they can't do that all in house. Um, so yeah, really what I want them to be doing now more than anything is to be, focusing on how to get that installation cost as low as possible, focus on how to actually install these things as quickly as possible. I mean, talking to Emmett about his experience, he had like a team of, I forget what it was, but it was something like 15 people around his house for like 3 weeks. And even though I'm sure he paid a decent amount of money for that roof, like I can't imagine that's a positive gross margin project for Tesla when they're taking that long to install.
Yeah.
So,
Wow.
the turnaround time needs to increase. They need to really drop or drive that down. And they need to get gross margin on these solar roof projects, to
Yeah.
some sort of sustainable level.
And there might be almost a disproportionate effect of, okay, if instead of focusing on households, what if you just focused on businesses with mega packs, and kind of focused on the lower hanging fruit when it comes to emissions? Is there some sort of scale on that, as to, one business is better than like four households or something like that?
Yeah, I mean, obviously you can deploy a lot more packs with mega packs. So you can do it. I mean, you get more bang for your buck. It's probably an easier installation process to do kind of a one huge project, rather than sending contractors out to 50 different homes to deploy the same amount of power walls. But that said, power walls are priced roughly 150, maybe $200 per kilowatt hour higher, on a per energy unit basis than the mega packs. So I'm not necessarily sure that the margins are better on one versus the other.
Mm.
Um, and I had been thinking, for some of the reasons that we were talking about earlier, of kind of avoiding those transmission and distribution costs, I had been thinking that Tesla was going to really focus on residential customers, to really scale that up.
Mm.
But one thing that's maybe changed my mind about that recently was just in this latest Q3 letter, Tesla disclosed that they were building dedicated mega pack capacity of 40 gigawatt hours, which is like, and that was just like some random chart in their
Yeah.
slide that I think most people missed, but it was like,
Yeah.
that's bigger than Giga Nevada, or it's just roughly on the same scale of it at least.
Yeah.
So it's a huge amount of capacity. And so, I mean, just doing the math on that, let's say that launches next year,
Hmm.
you know, that's about $10 billion per year in revenue that will be coming on the energy side really soon.
Mm.
Um, so it seems to me that they're taking the utility and kind of industrial customer opportunity very seriously. They did say at Battery they had a backlog for megapack orders that stretched out to 2023, which was like 3 years at the time. So it's clearly a huge opportunity there. I still kind of think in the long term, the bigger opportunity will be on the residential side.
Mm.
But I could be wrong on that. And, also that doesn't mean they should completely ignore that, bigger scale opportunity in the medium term.
Yeah, and when we talk about residential, I think that's a great point. Is that it kind of goes complementary with their auto business, right? If the more people that they can get set up on Tesla Solar, the more people that would probably be likely to convert into an electric vehicle household. So that kind of goes hand in hand. And there's a lot of people on Twitter that I'll see that not only buy a Tesla vehicle, but they get Tesla Solar installed. Emmett's a prime example of that. Within the same year. So kind of, having that ecosystem, that kind of almost Apple-like ecosystem, right? Where once you buy one product, you want to kind of become a part of all the other products that Tesla has is kind of their unique advantage in the space for sure, right?
Yeah, and I think that's you hit on something that I think is a bigger deal than most people realize. So, if you look at a company like Sunrun, which is one of the biggest solar installers in the country, they're I forget the exact number, but they're if you look at their customer acquisition cost as a percentage of their overall sales, it's something like 30%. So like 30 cents on every dollar that they generate is essentially spent on marketing, whereas Tesla spends nothing.
Mm,
Like, so they've just got this amazing ability to kind of avoid what for most companies is one of the largest single cost items in their entire income statement.
mm,
They're just saying now, like, we've got enough brand cachet and enough demand that we don't need any marketing, and we can just pass those savings on to the customers. And in fact, that's what they've done. I mean, they're the lowest solar cost provider in the United States right now, at
wow,
least if you're doing solar panels. For solar roof, it's obviously not the same, but that's an entirely different class of product.
mm,
But yeah, it's a huge advantage, and I think it's one that's underappreciated by many people.
for sure. And so I guess just and maybe you haven't done more of a discounted cash flow on this or a model about this, but what do you think Tesla Energy might be worth ballpark on the share price discounted to today? And I know it's very hard to with all the variables.
No, well, I actually did do that exercise a while ago, and it's for all the reasons we've talked about here, it's inherently speculative. So I did just to kind of set the stage a little bit. I did a very detailed discounted cash flow model earlier this year, which had made big assumptions. One of which was that Tesla would solve autonomy and kind of launch a robo taxi business. I forget exactly when, but maybe it was like 2024, that sort of time frame. And so I came up with an overall present value for Tesla of $2,900 per share at the time. And I think the energy portion of that was somewhere around the neighborhood of 350 or $400. So still relatively small in kind of the grand scheme of things. But I think that's mostly a factor of just kind of the math of when you have a huge flow of cash flows that's like in 2035, and you discount
Yeah,
that back all the way to the present with an equity discount rate. It just really kind of dwarfs that when
for
you're
sure.
comparing it to the present stream of automotive cash flows. But I think when you fast forward to 2030 or so, the relative mix of the energy valuation compared to the automotive will look a lot different.
Perfect. So 350-ish bucks a share. And yeah, that's so hard because 2035 is so far away. So, you can discount the best thing. And I'm not sure what discount rate you used. Like, what was it, 8, 9, 10% kind of?
I think it was closer to 10. It might have even been
Yeah,
11, because I wanted to include a little bit of execution risk in there.
fair.
Especially if you're going to take autonomy for granted. You need to kind of take that with a grain of salt. So, like, if you were to take autonomy and kind of the correlated
Hmm.
price increases for full self-driving that should enable Tesla to have. If you want to just kind of back that out, then maybe that's $1,500 of value that you'd back off.
Yeah,
So then you're at like 1,400 per share, I think.
for sure.
But even that, I think, is conservative because the value is not zero. I think some people would argue that the value of autonomy is zero. I think Gary Black takes that stance just to be conservative.
Right.
But in my mind, it's somewhere between zero and, I don't know, many tens of or many thousands of dollars per share. So
Yeah, it's yeah. I kind of take that approach of being binary as well, like black and white. It's either worth something or not. But as Tesla is appreciating, sitting here, Tesla's touching 1100 and 1200 bucks. Sorry, it's getting to that point where you're like, okay, let's start putting some of these other things into the valuation because they're at and by the way, switching gears here just for a quick second, I want to talk about AutoBidder as well because I think at more of a consumer level, I kind of imagine this ecosystem where people have Tesla energy products in their house. They obviously have a Tesla vehicle, and then they're making money off robo taxis while disrupting energy prices in their areas. Right? It's kind of like this sci-fi life that we're going to be living, hopefully, maybe in the next 5, 10, 15, 20 years. Who knows? How does AutoBidder work for those that are not familiar with AutoBidder? And what's kind of the potential there at more of a consumer even level to make money?
yeah, so it's going to be complicated. I mean, just to set the stage on kind of like the energy market in general, wholesale energy markets have what are called locational marginal prices, or LMPs. And generally, there's prices for wholesale power that the grid will quote in real time. So typically 5 minute intervals, each pricing interval is good for,
Mm,
at least here in the United States. And but that may be only in a dozen, or in a larger state like California. I'm not sure the exact number, but maybe there's 100 or a couple hundred different pricing points that are kind of geographically located, and so that you'll have different prices on that wholesale market tied to the geography. So you don't have actual wholesale prices in real time that like a residential customer could tap into, because that, like, the market for that just doesn't exist right now.
mm,
So if you're going to be saving energy, one of the things I like to think about is like, I just assume that the residential customer at least gets all of the energy benefit of your solar. And if they're selling back to the grid, it'll be at whatever kind of like the tariff rate, or the like the local utility rate, which allows for it. And those will be different whether there's net metering allowed, or depending on kind of the regulatory structure, those prices can vary wildly.
mm,
So on the residential side, I'm not sure that the opportunity is so much in kind of selling power back to the grid.
mm,
Um, but I do think there's going to be a huge opportunity for this, what's called ancillary services. And so you can essentially, it's like a virtual power plant. We've kind of heard that term before, but you can string together hundreds or thousands of kind of different power walls, or solar panels or whatever, and kind of use them in aggregate as a type of power resource, that a grid operator can say, okay, yeah, we'll treat it like a normal power plant, because you can kind of operate it like a normal power plant. So in terms of AutoBidder, I do think that's going to be primarily on the like commercial and industrial side for right now. But the thing that's really impressive about that is, like, utilities and power plant operators are just not structured to make real-time decisions like that at
mm,
all. Um, so like we had a trading desk at this company that I worked with, that was kind of managing a lot of the daily dispatch decisions for power plants across, and maybe there were a dozen or 2 dozen different power plants, and kind of pricing decisions they had to make every day.
mhm,
But a pretty common thing within the electric market is you may go from kind of steady state of prices are $30 per megawatt hour, and then out of the blue they may spike up to like $200 for 15 minutes. And like companies and people and like are just not suited to say, oh shoot, I just noticed like the real-time 5 minute um, pricing shot up, so we need to change our offer strategy. Typically, like the way the power plant is going to be run is managed for the entire 24-hour period. So like right now it's 3:30 Eastern. Right about now they'll be making the decision of how each power plant is going to run tomorrow, and they
mm,
generally don't deviate from that. So they'll say, okay, we're going to start the plant at 11 o'clock, and we'll run it till 5 o'clock, and then we'll shut it down. So like that's the way the entire industry is structured for the most part. So AutoBidder comes in with battery technology that is way more capable of reacting in short time intervals than a normal power plant is, because even the most responsive like gas power plants, they'll still take 15-20 minutes to kind of like ramp up and down between 10 and 20 megawatt ranges. Um, so even if you want to, even if you had guys that were completely on top of it and say, hey, like crank up the plant, we've got a price spike event, they just can't.
mm,
So like nobody's even trying to do what Tesla's doing on AutoBidder. I shouldn't say nobody, but the vast majority of companies that I'm aware of are not trying to do that. So what they're going to be able to do is to say, hey, listen, like we've got real-time artificial intelligence software that's going to be monitoring this, that can take into account, any number of varieties of different market conditions that are out there, as well as whatever your local site needs are, and kind of customize and tailor around that. And then we will match the actual physical dispatch and charging characteristics of your mega pack to the real-time pricing that the market is giving you. And that's an incredibly compelling value proposition.
mm,
So on top of just a low price hardware, which Tesla definitely has,
right.
they've got this like secret sauce that other companies just really aren't capable of providing. So it's really encouraging, really exciting, I think.
Wow, that's incredible. And yes, I mean Tesla has this AI advantage. It kind of seems like with every product, and I think the more data Tesla collects, the more unique their data set, just the better the data set is going to be. So, and it's funny because they're almost collecting all of this stuff right now, and no one. And that's why I kind of title it like hidden billions, because I don't think it's not only is it not talked about enough, Tesla doesn't talk about it that much, like you're saying, right? So, what you're saying is damper the expectations a little bit on the consumer level of auto bidding. That might not be too big of a case, but for the corporations, it would be.
Yeah, I think so. But I mean, there's going to be I think there's opportunities across the board. I mean, like the auto bidder opportunity is clearly there, right now on the commercial and industrial side. And, we talked about them adding 40 gigawatt hours of capacity. So like it's really a mystery to us. How much money are they making per project right now? Like there's
Right.
no way of knowing that.
Yeah.
But I would imagine when you get to kind of 40 gigawatt hours of hardware sales, they're going to have to break out some more detail, or at a minimum, you'll be able to say, okay, margins are kind of increasing at a some sort of rate. So it's certainly going to have to come out in a little bit more detail, I think.
Hmm.
But yeah, I think there's opportunities like that on the customer side, on the residential customer side, but I think they'll be different. Like I was saying, kind of aggregating and getting ancillary services.
Mm. Tesla not reporting it is definitely an opportunity, but it's also a risk because we don't know, right? And I guess you could take both sides of that coin and say, because we don't know, it's hard to project, and therefore you shouldn't. But also, that is kind of the alpha right there. Is if you believe in it and you have the expertise like you do to be able to project, somewhat accurately on this, this could be a big boon. Moving into the next question, what do most people in your experience get wrong about Tesla Energy? Whether it's an assumption or something that they think will happen that you don't anticipate. What's something that you think people get wrong?
Yeah, I would. I'll give two answers to that. Yeah, I think people either assume it has zero value, which is probably the most common answer, or people assume that it should be like half of Tesla's share price today, or something like that.
Okay.
Because Elon says that it's going to be as big as auto, so like take today's current stock price and double it, and that should be like Tesla Energy should be $1,200 today. I don't think that's right either.
Okay.
So I think people are either just completely ignore it, or they assume it's like the greatest thing since sliced bread. And in the medium term, I'm honestly much more excited about autonomy than I am about energy. But I do think 10 years from now, energy is going to start getting really, really exciting.
Perfect. Awesome. And I'm kind of in that boat. It's funny because you mentioned that because I'm kind of in both boats depending on the day that you ask me. I sometimes will double it. It's like, well, Elon has said it, and obviously you can't take everything that he says at face value. You have to discount for Elon time. But then
Yeah, where's our
also,
Tesla candy, by the way? We
what's
need
that?
our candy
Yeah,
candy
yeah.
innovations.
Well, hey man, I'm still waiting for the Tesla tequila to come to Canada, so I'll be waiting. I'll be waiting for the while. It just can't get through the border because of the alcohol content.
I can't get it in Michigan for some reason either. I don't
Oh,
understand
really?
that. Yeah.
Oh, okay. Well, I guess we're both under probation. Um, Now, and I see some questions coming in here. And if you have any questions, toss them in the chat, and we can ask them towards the end. But I just want to flip a little bit into the current stock price, and currently sitting at 11.97 here. Um, and I know we talked a little bit about this in the beginning of the stream, but thoughts on quarter four? Fundamentally speaking, obviously Tesla quarter four is Tesla going to probably go out with a bang. Thoughts on margin, thoughts about what we can expect from Tesla's financials in quarter four, good or bad?
Yeah, so I haven't completely updated my financial model on that yet. So I'll maybe stick to generalities rather than actual predictions. But I think the one thing to keep an eye on as a potential risk is the risk of maybe like a short term pause in U.S. demand as this kind of tax credit issue gets held up. So if January 1st is the start date, then theoretically some U.S. buyers could push to January or to Q1 to take delivery. That's not a. I don't think that will happen, to be honest with you, but I think it's possible that it could. So I'm going to kind of continue to keep an eye on that. I know Troy Teslike has he does really great production and delivery forecasts, and he's kind of expecting some amount of impact from that.
Hmm.
But overall, I think, and even if that does happen, I'm sure people will freak out about it or whatever. But then
Yeah.
Q1 will just be that much better, honestly.
Right. Right.
So I'm really not too worried about it because it'll just be a timing mismatch. But assuming that doesn't happen and you kind of have like a normal growth in deliveries to some amounts a bit higher than we saw in Q3, yeah, I would expect that your margins would start to increase a little bit higher from where they were. I mean, Tesla's credit sales were really low again in Q3. They also didn't take any of the deferred FSD revenue, which sounds like they have, from Zach's comments, it sounds like they have a little bit of flexibility to take some of those full self-driving deferred revenue balances and actually run them through the income statement. I think there's a reasonable debate on whether or not people will back those out or not. But even if they don't, then you're going to have some incremental recognition on new full self-driving sales.
Mm.
So, I mean, putting all that together, there's a lot there, but I would kind of expect we have another quarter that's 30% plus automotive gross margins. I think you'll see a little bit of growth on the bottom line. So really, I don't think it's going to be anything drastic either way. I think we'll have just a little bit of kind of incremental growth in a lot of the key metrics in Q4 compared to where they were in Q3.
And you hit on something super cool, which is, I mean, accounting wise, super cool. Deferred revenue. And let's talk about that a little bit. And I'll kind of set the stage for you. And correct me if I'm wrong in kind of any of this. So Tesla gets FSD revenue today. They can't recognize all of it as income because they haven't fulfilled all the needs of what is full self-driving. So it's about 50%, is it right now, that they can recognize?
Yeah, I think it's by my estimates, it's like 42%, but yeah, I'm cutting hairs at this point. So yeah, call it 50%.
And it's funny because Tesla doesn't even tell us that number, right? That's what you had to back out in a video that I saw where you did all the kind of jumping of the gymnastics of the math and trying to figure this out. So 50% is what Tesla can take to the bottom line right now. And as they release more features, and we saw some last year, they'll be able to unlock a greater percentage of that revenue. So right now, it's about $1.8 billion worth of deferred revenue sitting on the balance sheet. Maybe more because now we're in the middle of the quarter, but we won't know until the end. And how and when can Tesla? You talked about Zach hinting at that sort of stuff. How and when can Tesla unlock that, and how much of an effect can it have in the short term on earnings per share, do you think?
Yeah, so there are a couple different buckets of deferred revenue. So that there's deferred revenue for like free supercharging that they've given out, and like some other expenses that are for the most part zero margin. So those are kind of less interesting, obviously. But for the full self-driving, that's the lion's share of the deferred revenue balance.
Mhm.
Um,
Yep.
and yeah, that's I mean that's just been accumulating essentially since, what was it, 20, I don't know, it's been accumulating forever essentially ever
Yeah.
since started offering this product.
Mhm.
Because yeah, they couldn't recognize all of it at first. They could recognize very little of it because they hadn't delivered almost any of the functionality. But then what you've seen, I can't remember the last time they actually recognized a portion of it, but as they have rolled out this software set to more customers, they've been able to not only they've been able to recognize a portion of that balance. So it goes from a liability on their balance sheet, and that liability essentially kind of gets written off as income comes in on the income statement. So if Tesla, let's just say for example that Tesla is done with the beta program, at least in
Mhm.
the United States here in Q4. They decide to ship full self-driving to all customers who have paid for it. Then let's just say maybe that's like $800 million worth of the deferred revenue balance.
Mhm.
Because assuming maybe another 800 or $1 billion maybe for customers in Canada and Europe and elsewhere that have bought it, that have even less functionality than current US drivers do.
Yeah.
So it's not all going to be recognized at once.
Yeah. We're peasants.
But if peasants. Yeah, well, Canada's a little bit better than like say the functionality in China is really not there.
Yeah,
So
for sure.
I don't know, middle class maybe. I don't know. But I'm like 30 minutes from the border, so I'm right
Okay.
there with you. I'm in like Canada Junior.
Yeah.
Um, but so yeah, they'll be able to recognize that revenue all at once from essentially from historical sales. And so
Mm.
I think a lot of analysts will probably back that out. I mean, if you can imagine like an $800 million slug to gross margin in one quarter,
Yeah.
it's going to make it look crazy.
Mm.
And so I think a lot of analysts will back that out. But the thing I always like to keep in mind is if you're going to back that out, really the prudent thing to do as a financial analyst would be to say, all right, we'll exclude that from this quarter, but maybe
Mhm.
add it back to the previous quarters where, Tesla's reported GAAP income was actually artificially low
Mm.
because you excluded that $800 million of revenue from previous quarters.
Mm.
So this is something a lot of the Wall Street analysts I've seen actually aren't modeling it out in this level of detail. And I think that's a big mistake
Mm.
because it's a really impactful amount. So in
Yeah.
Q3, for example, my estimate just of the full self-driving margin that was not recognized, due to 42% being deferred, was around $200 million. So you fast forward to wherever we are in the future, and we're kind of past this deferred revenue balance conversation.
Hmm.
Whether it's 2023 and all geographies have it fully recognized, but at some point in the future, all of that amount will be recognized, and so that's going to be more kind of upward pressure on gross margins,
Mm.
on top of what's
Wow.
already pretty phenomenal margins just on the back of their strong manufacturing.
Wow, that's crazy. And obviously, there's going to be some sort of a tampering or a dampening effect, pardon me, because of FSD subscription, I presume, because a lot of
Mhm.
that money is not going to be, it's going to be over the years. But one point, so $800 million, and yes, it'll be a one-time thing, but and we just broke above $1,200 here. $800 million, and there's about sure, it's a one-time thing, but I remember last year how often people would be talking about deferred revenue. I was like, okay, well, maybe they can become profitable if they recognize this sort of, even the small percentage of deferred revenue. And now the fact that we've even kind of forgotten about this conversation, I almost feel like on Tesla Twitter of like deferred revenue even exists, and it's just kind of like a backlog thing that we talk about now, which is kind of a blessing in disguise. I almost feel like it will catch, like you're saying, a lot of these analysts by surprise. Now, whether they back it out or not, or whatever, but I still think there will be that shock in the open market when Tesla does release those numbers. But the question is really, increasing beta size doesn't grant them increased percentage of deferred revenue, does it?
No, so Zach Kirkhorn did clarify that on the Q3 call that, yeah, they have made the decision that since this is still in beta,
Hmm.
they're not going to recognize incremental revenue from that. I think until it gets, what would be a little bit more kind of fully developed version of the software. So yeah, honestly, I don't think it'll happen in Q4, unless the kind of the pace of improvements really kind of quickens. But at
Yeah.
some point, whether it's Q1, Q2, you'll see kind of this huge slug of deferred revenue be recognized. But yeah, it sounds like from those comments and kind of poking around the 10Q, my initial thought had been that they would recognize revenue, but just on like the beta testers. So maybe there'd be like, I don't know, 1,000 or 2,000 customers that they'd recognize that incremental amount. So you'd see, I don't know, a million or a couple $1 million of deferred revenue be recognized, and that would just kind of continue to leak out. But they've made the choice to just wait until the software is more developed. So we'll see.
Do you have any? Yeah, and you said quarter one, quarter two. Obviously, the kind of the main feature left is City Street is just City Street driving at this point. I think everything else is, and I say just City Street driving as if it's like a little thing to release, but that's the only one to my knowledge, right?
Yeah, at least in the US. I think so. Based on the accounting rules, my understanding of them, um, you can't recognize them. Uh, like the recognition amount varies by customer. So it's not like they have total full self-driving cash intake and they're recognizing 42% of it across the board. I think it's geographically spaced. And so they say, okay, we have the visualizations in the United States. So maybe they recognize a little bit of that. I can't remember what that last thing was they recognized, but it'll be, I would imagine they'd recognize all of US FSD first, and then probably it'll taper from there as that you know, ready version of it ships to other countries.
Right. Okay. Gotcha. And by the way, do you have any experience with FSD beta at all? Have you driven in a beta car?
Yeah, I do. So I was a 99 safety score. So I just
Nice.
got it. Was that 2 weeks ago, I guess now, or a week and a half ago.
How's it?
So yeah, it's I have mixed feelings of it, honestly. Like on the one
Right.
hand, it's incredibly impressive what it can do. Like just it's like so much better than any other commercially available car.
Mm,
But at the same time, it's like clearly a beta product. So
right.
it does a lot of things that are not, the way I describe it to some people is, at least right now for the drives that I've had, it does not make the driving experience more relaxing, which I
Right.
think is
Okay.
going to be like the good sign of when it's ready.
Right.
And some of that may just be me, being relatively new to it, but still I find it's doing strange things on a regular basis. So I'm really curious to see how with future kind of updates, how much that
Mhm.
improves. But yeah,
And
I've
it's
heard.
oh, sorry, go ahead.
No, sorry. I was just gonna say, like, I for sure won't put it on with my wife in there at least yet, because she'll be like so annoyed of like, oh, it's jerking around, or what is it doing? And
Right.
like, I love it just as like a technology enthusiast. Like, oh, this is so cool, and I'm training it by taking over, and like I love it. But
Yeah.
yeah, it does require more vigilance, and like that's in contrast to I think the
Mm,
highway driving is so much more relaxing
mm.
than a normal car driving. But on the city streets, my experience is that it's not quite there yet.
Yeah, it's not ready to have the kids in there just yet. But one thing that is encouraging, at least to me, is to see how often Tesla is updating FSD beta. Like we're seeing what every other week now. There's a new update and they're dropping the score, and so that's promising to see. I think progress is a little bit harder to measure because it's so subjective in some cases, and
Yeah,
it's so so different based on where you are. Like you're in Michigan, someone was doing it in San Francisco, like there's some YouTube channels out there. Like it's going to be so different. But I guess that's the
yeah.
advantage, isn't it? Is like you can drop this thing anywhere and turn it on, and then it can go. Hopefully,
Yeah, well, and I think that's true. I mean, because I've seen a lot of the videos of people in San Francisco and elsewhere, and it's like, oh wow, this thing does like really really well on almost any situation that seems to be thrown at it. Um, One theory I have, which I don't know if it's true or not, but they may have kind of dialed up some of the caution um, of it just as it goes to wider release. You got folks like myself who are haven't driven it before. You want the car to be more cautious rather than kind of more assertive. And it's like, for example, one of the issues that I've seen with it is creeping up to like a four-way stop with nobody coming.
hmm
Like the car will just continue to creep forward, and it says like creeping forward for visibility, and I'm like, it's clearly visible that nobody's coming, but it
right?
just wants to be like absolutely certain, I guess, that nobody's going to come blasting through on the other side. As
Little
far
things
as
like that.
excuse me, as far as I can tell, there's like a little bit of extra caution that I would imagine they'll dial back once it gets a little bit more assertive.
Yeah, and yeah, I definitely don't mind the extra caution. Like one thing that I've been seeing in a lot of left turn videos is that like it'll creep, but it'll stop way before where it should, and then it'll creep really slow until a point where it's like, as a human driver, I'd have to go even further to even check. So it's just super awkward in some of those scenarios
Yeah.
still. But the fact that it's on vision only, right, is just
Hmm.
it's just crazy to think that it's only working on vision. There's no
Yeah.
lidar, there's no radar. By the way, we just made a new all-time high intraday. Or yeah. Oh, we're about 50 cents away from an all-time high. There we go. We just made it 12.10.
Wow.
And
Yeah.
I think we hit 12.20, was it? After hours one of these days.
Yeah, I think it might have been like 12:24 or
Yeah.
12:26, something like that. Yeah.
But then we gapped down the following morning because Elon put out that Hertz tweet, right?
Yeah. Yeah. I mean, I don't even know if that drove it down necessarily or not, but um, yeah, it's kind of crazy. I was sort of expecting it would go the other way. I mean, we've had such a run up. I
I
wouldn't have
know.
surprised me if it was kind of gapped down $50 or so and kind of stood there. And that's what I thought was happening today a little bit. So the fact that it had so much stability earlier today and
Yeah.
then just really rallied hard as soon as you went live. So well done.
Both of us. As soon as we went live, and I'm looking at the low of the day. It was 11.50. Two was the low of the day, and it's funny how these like 50, 60 price dollar movements now to us in the last couple weeks are like just like nothing burgers. We're like, oh yeah, it just moved $50. Whereas like we waited the entire summer for even like a $15 move on most days. Yeah, it's just
Yeah, or like another crazy thing is, like I was buying back at like the 250 range, and so like these $50 swings are my cost basis on some of my original shares, which is just like crazy to have daily movements of your cost basis from just a couple of years ago.
right.
So, and I mean, long-term holders, that's going to be a huge multiple above even that. Yeah, so it's just crazy the movements, yeah, that we're kind of getting accustomed to.
I
We're
know.
spoiled.
We're definitely split, but this is the problem I'm having. I'm not sure if you're facing the same. Is like selling premium on the call side is like, okay, obviously premium is good, but is it good for a reason? And we know what happened to any sort of call sellers in the last month here. When does this train? When does this freight train stop? In your opinion, does it stop in the next week or two, or does it continue?
Yeah, I don't know. I mean, that's the question, right? Yeah, I was looking at some of the call prices, and they're super attractive, but um, to get it's like at the same time you can also get like railroaded. I mean, I honestly was thinking, like, what was it, 2 3 weeks ago, and we were kind of crossing 1,000. I was like, all right, that's been a nice rally. I'm sure it's going to kind of
Yeah.
settle out here for a little bit. Maybe we'll drop down to 950, and instead it was just like rocket straight past that. Um, so I was kind of doing covered calls earlier this year, and I stopped. I don't know, probably in April or so. They'd done really well for me, but it was just, the implied volatility had dropped by that time, so I just didn't like the risk reward as much.
Mm,
And now that kind of implied volatility has come back, now I'm scared for the other reason, just that, like,
that's it.
I don't
Yeah.
want to get burned on the 10x. Like, I was looking at calls just yesterday, I think it was. I was like, maybe I'll sell a couple covered calls because premium is just crazy right now. And I was looking
Mhm.
at like I was like, all right, I feel safe if I sold like a 1500 call expiring Friday, and that was
Mhm.
even priced at $1. And I'm like, that
Yeah,
is
I
just so
know.
crazy.
I
Like,
know. Isn't that
so
nuts?
like
That's crazy.
you'd want to get that high just to like ensure you don't get run over. But even then, it's like I don't like the risk reward of getting a
You're
dollar.
getting a dollar, right? Like, what's
Yeah.
yeah, there's not really much in there, right? But this is the problem. It's like I had the same scenario in my head as like when IV was low all summer. Now, like, there's no point of selling premium when IV's low. And now when IV's high, I don't want to get run over. So it's like I'm sidelined in both scenarios, and maybe that's just because I'm more of a scared person than the average person. But I guess law of large numbers would be like Tesla can't go up $300 every week in perpetuity. Well, maybe it can.
Hmm.
But I mean, $300 is a crazy amount, and I'm not sure if you saw the headline. Tesla in the last week has gained more market cap in than any other company in any capital market history. Uh,
No, I didn't see that. Wow, that's a crazy record.
I think it was 3 days. Even I'm rounding up to a week, but I think the article said in these 3 day span in terms of market
Well,
cap.
yeah, they went up like 200 billion in 2 days at one point, I think. So, I mean, I guess that makes sense. I mean, how many companies do that? But
That's like that's
yeah,
like
it's
that's like two squares fitting into 1 day's worth of a Tesla. That's And I think this is
yeah.
definitely a function of as well of like there's not that many shares available effectively in the float. There's a lot of hodlers
Mhm.
out there, and there are rumors out there that or pardon me, that Tesla that Elon will have to sell a portion of his shares to fund his exorcism and then his tax bill. Any thoughts on that? Have you given that much thought?
Yeah. So like Bradford Ferguson did a lot of research on that. That was, I think, really, really good and really insightful. I do think he'll sell a few shares to kind of cover the tax liability, but I don't think it's a given necessarily. I mean, he's got this well documented, loan arrangement with, I think it's like Goldman Sachs and several other large banks that I
Hmm.
forget the exact amount of it, but it was something like a $1 billion, like essentially borrow as much as you want to kind of fund your life. Um, and since that time, I mean, he's downsized. He's sold a lot of his homes,
True.
and I would imagine with what his net worth has done in the last
Yeah.
year or so since I've last heard about that facility that he had with those banks. If he, I forget the exact. Do you remember offhand how much money he needed to pay for the taxes on the exercise of those?
I don't remember. I don't want to misquote it. It was in the billions
Yeah,
for sure,
it
but
was in the billions. So like to me, he's worth what, like almost 300 billion at this point.
I think more than that. Yeah.
Is it more than that? Yeah.
335 or something, I think.
If he wanted to not sell Tesla and wanted to kind of fund that, I'm sure the banks would be happy to kind of create a product for him to do that.
That's
So
yeah.
to me, it's his choice. I mean, if I were him personally, I'd sell some shares and be like, listen, like I'm doing well. Like, but I think he's been so kind of adamant about, I'm going to be the first money in, last money out, and
Right. Right.
that if I don't think anybody would fault him for selling some shares, but I don't think it's a given necessarily.
Interesting. And it does look like we're about to close at all-time high. We have a minute left here till close. 12:15 was our high of day today. Nuts. We've rallied since the stream started. Not that it matters, but we've rallied from 1180 to now sitting at 1214. Not a bad stream. You should come on more often,
Yeah, if we can guarantee stuff like this, I'd be happy to.
And I
No,
also
I've really enjoyed it. So yeah, I'm happy to come back anytime.
and maybe we can dive more into more of the specifics as well on some things that you were saying that could take a whole entire episode as well. I see Dave Lee saying that he's using his stare power in the chat. So maybe there's some sort of a meditative power that he has that we don't as plebs, but it's definitely possible.
His eyes must be hurting because he's been doing a lot of staring for the last like 6 weeks by my math now.
I
So thank you,
respect it.
Dave,
Yeah,
for all that great staring. I do
thank you.
too.
Yes, no, it's definitely helping all of us. 121389 sitting on Tesla. Is this gonna? I think this might be okay. There we go. We just closed. 121386 was the closing price. It feels like one of those days we're gonna continue to run in after hours. It seems like no.
Yeah, it definitely does feel that way.
And almost like this price movement to me almost feels like it confirms that theory of folks or whales or funds being underweight where they need to catch up on some allotted shares. So anytime there's any sort of dip that we're seeing, it's being bought up. Any sort of dip it's at a micro level, on a 5 minute level, but even on a daily level, when Elon tweeted about the Hertz deal not being actually signed, yes, we gapped down, but right after that, we actually all those shares were clobbered up. Might be shorts covering as well, but it just feels like there's a never-ending thing right now happening with Tesla, and I wish I could do more math on the funds, like the amount of funds out there and how underweight they possibly could be. I'm not sure if that's feasibly possible though.
Yeah, I know. If I recall correctly, Rob Maurer did some good work on that, like around the time of S&P inclusion, where he looked at the funds that were obligated to buy and those who just had the S&P as an index that they were kind of um, judged against for their returns, and then others where it was kind of more discretionary. So I don't remember any of the details from that, but yeah, maybe it was like roughly a year ago that he posted some really good math on that. It might be good to dig that up again.
Yeah, and do you find, by the way, on any of this theory about the investment upgrade that or the credit rating upgrade that Tesla got a couple weeks back on the Friday, I think, and then following the Monday is
Mhm.
kind of where we started rallying. Do you think that plays into a large portion of potentially funds out there that are saying, okay, we're not investing in something unless it's a double B plus, which is what Tesla is now? Do you think
Yeah.
that that's part of it?
I do now, like I was saying earlier, I'm not super familiar with all the rules for different PMs out there that what they would have for their funds, but it did seem to me that that was like a pretty immediate catalyst. And like if you're just an equity holder or a normal kind of retail investor, you shouldn't really care about that, right? Um, it's on the debt side, and like the whole thing is actually just ridiculous. I mean, they've got more cash on hand than debt, so like these ratings are
I
just like
know.
so dumb.
Yeah,
Like it should be like a AAA at this point. So the fact that they're just kind of like so slow moving.
I
I
know.
mean, if you look at like their debt to enterprise value, well, it's got to be like at less than 1%, I would think. We're gonna check my math on that, but
Well, it has to
you
be now.
know,
Yeah.
it's like what 10 million or less, I think, of debt compared to 1.2 in equity.
Yes.
So
Yeah.
I know that's not the way that the rating agencies look at it. I mean, they're looking at cash flows, but it's like,
Yeah.
I mean, how much less how it's just like the least risky investment I could imagine if you're trying to seek safe debt.
Honestly, yeah, especially
So
when you compare it with legacy auto, right? With how much debt, and it's a little bit of a different model. They have more of the dealership model, so there's a little bit more debt there. But especially when you compare it
yeah,
with
and
their
they
competitors.
well, they have financing arms, but yeah, I mean, like the competitors have way more debt than Tesla does, despite the market cap being a lot lower for them. So yeah, they're much more highly levered, and I would say that does create a little bit of a risk for them. And I mean, we saw that with the bankruptcies in 2008, where these companies just they couldn't afford their debt service and they went bankrupt.
Mm,
Um, and like that's not a risk for Tesla anymore. I mean, that was
yeah,
maybe a legitimate risk in 2017 as Model 3 was ramping.
yeah.
Obviously they could backstop that with capital raises, which they did. But yeah, I think it's kind of crazy to kind of fear liquidity for Tesla at this point. Like
Yeah, yeah, honestly. By the way, Mark, thanks for the super chat. I see it coming. Matt, I do have a question about this. Okay, I kind of have this conspiracy going on where, oh, well, it's not a conspiracy. I should rephrase that. I kind of have this worry, I should say, of Tesla climbing this high, Morgan Stanley coming out with an upgrade a couple weeks back. What are the chances that Tesla does another capital raise in the next coming couple of weeks? I know they don't need the money, but is that a risk in your opinion?
I mean, I was surprised by the last one. What was that? That was earlier this year, I think, right? Maybe it
Yeah,
was like April or something
I think it
like
was
that.
December or what? Oh,
Was
they
it
did the
December?
December, December.
Okay, yeah. So I was a little bit surprised by that one. 'Cause, then I thought they didn't really need the capital either. But I would, at this point, I would be very surprised. I mean, they generated, I think it was like 1.3 or 1.4 billion of free cash flow.
Mm,
They were over 3 billion in operating cash flow. They had, I think it was like around 1.5 billion of capex. So they generated more just in free cash flow this quarter than I think they did with their last capital raise. So they're sitting on like this kind of mountain of cash right now. They've got more cash than debt, like we said earlier.
yep.
And frankly, they don't have. I do think their capex needs are going to be huge over the next decade. That's one thing we didn't really touch on. I mean, I did some rough kind of math of them building out battery capacity and all the other capacity for installation. And I think it's reasonable that it could be somewhere in like the 70 to 100 billion dollar range over the next decade.
Okay. Yeah.
So like that's like no joke. They're going to need to spend a lot of money to build out all this capacity.
Mm,
But they've proven so far when they're ramping like crazy. I mean, what are they going to do? 70% delivery growth, something like that this
yeah.
year.
Yeah.
Um, and they're doing that on a free cash flow positive basis, which is like
Right.
insane.
It's true.
So if they can grow as fast as they did in 2021 and still be free cash flow positive, I kind of struggle to see why they couldn't kind of keep that up as they go forward, and presumably margins will be even better when you have the more advanced manufacturing facilities online. I do think one of the other huge catalysts that I think is underrated is full self-driving take rate is super low right now.
Okay.
So if that starts to pick up, that's another huge kind of cash flow and
Mm,
earnings like margin boost potential going forward. So I
mm.
don't think they need it. I would personally be disappointed as a shareholder if they did that.
Yeah, me too.
But I've been surprised before.
For sure. And yeah, I don't see the need either to dilute shareholders again. I think the last one that they did was kind of met with raised eyebrows as well, where it's like, well, it was kind of a backhanded capital raise as well, where it was like S&P inclusion was coming up and they were like, fine, we'll do a $5 billion small capital raise just to kind of keep you guys happy to provide some liquidity maybe. But at the end of the day, I wonder how much pressure they face with the $300 increase in a matter of a couple of weeks, appreciation in their stock from maybe the board of directors, maybe from other shareholders or people that invest in Tesla. Hey, you've increased $300 per share, effectively 300 billion ish market cap in a couple of weeks. Maybe capitalize some of this. So I wonder if they'll succumb to that pressure or not, but to be determined.
Yeah, the MBA in me would say it's a good idea, but I honestly don't think they need to. I think that'd be, you know, a little bit unnecessary. It's interesting though, because it's like back in 2016, 17, they were raising all this debt, which like every finance professional would tell you was absolutely like the wrong thing to do at that time. Well, it turned out really well. Like I'm super glad they didn't dilute at those prices. I think in retrospect, that clearly worked out. But at the same time now it seems that there's been a little bit of a, I don't know, maturing or kind of more professionalism in the way that they're managing it.
Mm.
You've seen Elon kind of step off these earnings calls, and like the last one was frankly much more boring, but like much more
Yeah.
typical of what other earnings calls sound like. Just like a little bit more professional, a little bit kind
Yeah.
of less shooting from the hip.
Right.
And yeah, I think your normal business school professor would tell you do a capital raise at this level. So maybe there is a little bit of that
Yeah.
mentality that's creeping in there. It wouldn't be completely surprising to me if they did that, but yeah, like I said, I would be a bit disappointed.
Awesome. Well, thanks so much for coming on. I'm going to toss your Twitter into the chat here for everyone to go follow Matt. Thanks for coming on again. Super awesome insights. I wish we can keep going on. I want to respect your time. Happy to have you on again, Matt. Obviously, you're good juju to the stock price as well. We rallied like $50 since then. So thanks for coming on. Anything you want to plug? Anything you want to share? I know you have a YouTube channel as well. If you want to go ahead and share that.
Yeah. So Emmett Peppers and I do our weekly live streams. You can check us out. We've got the Good Soil Investment YouTube channel, so you can check those out there. We're doing some pretty cool interviews as well. We had a really interesting one, if anyone's interested in the metaverse, with this Bloomberg analyst, Matthew Canterman, kind of talking about that space and Roblox. We've got another couple interesting ones coming up. So yeah, check out our YouTube channel. And but no, thanks so much for having me on, Yashu. Really enjoyed it, and yeah, the stock price was really fun. So and thanks Dave for the good staring. We really
Honestly,
appreciate that.
appreciate it. Thanks everyone for watching. I tossed Matt's link in there for Twitter. Go follow him. You'll find all the links on his Twitter. All right, guys, take care. Thanks for tuning in. Peace. Thanks, Matt. That was awesome.